Welcome, everyone. Thank you for joining us today for our webinar to discuss auto buying. My name is Josh Antus. I'm with California Coast Credit Union. Just want to say welcome to everyone and hope you're staying safe out there and staying cool. If you're here locally here in San Diego, which most of us I'm sure are, it's been pretty hot. So hope you're staying nice and cool out there. Wanted to touch on a few things before we get started. Want to mention that everyone will be placed on mute for the duration of today's presentation. However, if you do have any questions in regards to the materials or to any of the products or services that CalCoast has to offer, we can answer those questions for you. You can place those right into the chat box, or you can use the question and answer box. I'll be monitoring those, and I'll make sure that we get all questions answered, as I'm sure there will be plenty when it comes to auto buying. And then also, I just want to mention that we do monthly webinars like the one today as a credit union, but we also have a lot of great financial wellness resources that are available to you. One of them is called Enrich. It's a financial wellness portal that we have available. It's completely free, and it has videos, articles, tools, games, all kinds of stuff, courses even that you can take on any number of financially related topics. I'll place the link to that tool in the chat. Again, it's completely free for members, and you can check it out anytime. And we also offer recordings of previous webinars, including this webinar. We'll have the recording of this session today available on our YouTube channel. So I will place that into the link to that in the chat as well. So you can access those anytime. All right, so with that, we have a really great group of presenters today. We have Kevin Watkins is going to kick us off. He's the principal owner of New Cars, Inc. They've been a partner of ours. They're an auto buying service that has been partnered with CalCoast for over 30 years. And Kevin will kind of give you an intro to what New Cars is all about. And after Kevin presents the material he has today, then we also have Wawanesa with us. We have Leo Morales, who is the marketing manager for, or his title is Marketing Manager, U.S. Operations. And we also have, I think Jude has joined us now as well. Jude is the sales manager with Wawanesa as well. So towards the end of today's presentation, they're going to talk about insurance and the ins and outs and the pitfalls and what to look for, and some really great information that I think will be useful, because hey, when you buy a car, you got to also insure it, right? So but we're really happy to be partnered with Wawanesa as well, and they've actually worked with us before. They've been really great partners when it comes to our foundation. They actually were the supporters of our very first golf tournament we did with our foundation, raising money for student scholarships and teacher grants. So we appreciate all that they do, and we're really excited to have them as a partner. And I do want to mention that Andres de la Mora is also with us as from our business development department here at CalCoast. Again, him and I will be monitoring the chat and the question and answer box. If you have any questions at all, feel free to ask. All right, so with that, I'm going to go ahead and turn it over to Kevin. Kevin, take us through.
Take us through the process of auto buying. It's been a challenging year, as I'm sure we all know, but now that we're coming out of the pandemic, getting back to some type of normalcy in our worlds, consumers are out there, credit union members are out there looking to buy vehicles. So for about the next 30 minutes, I'm going to run you through the process called 360 of auto buying. Auto buying is a little bit complex at times, just because the manufacturers and the dealers make it that way. And I think that's kind of antiquates the process, but I'm going to take you through what I consider to be best practices along with CalCoast. We've been with CalCoast over 30 years as their auto buying service. So I'm going to get started, and at the end, I'm going to do a little bit about our actual business model and what we do. But in the meantime, I believe Josh is going to be taking questions during this presentation. So if you have any, please feel free to throw out your questions. Josh will let me know, and we'll stop and talk about your questions. So what you're going to learn today, what we're going to talk about, what are the best practices, how to be prepared, how to do your homework. Buying a car should not be an emotional purchase. It should be a logical purchase. auto dealers set up their model to help you buy vehicles emotionally. We believe that buying them logically makes a lot more sense. Going through a strict process of knowing what you want before you go out and get under the ether to buy a car. We're going to talk a little bit about the financing process. And then at the end, again, we're going to talk a little bit about how our auto buying service works. So let's jump in. How much can you afford? You're driving along and you see that brand new, beautiful red Corvette go by you and you go, can I afford that? I have no idea. I don't even know how much that car is. Well, there's lots and lots of tools on the internet today to help you figure out what type of vehicle you'd like. All kinds of manufacturers' websites, all kinds of secondhand websites that provide products and services. Another one of the partners for Cal Coast Credit Union is TrueCar. TrueCar is a great product for you to go out there and do some homework on. You can get pricing and ideas of what with a bell curve of what people should pay for cars. But we're going to jump right in first and talk about your net income to get to disposable income. So we all make a gross income. We all pay taxes. After that, you have a net income figure that you're taking home. Then you have your expenses, which is your mortgage, your rent, your insurance, kids' school, all of that. And you get down to a net number, which is called disposable income. So from there, then it's how much of that disposable income do you want to spend on a new vehicle or a pre-owned vehicle? This payment calculator is available on cars.com. I also believe there's now a payment calculator on CalCoast website. I know there's a payment calculator on our website, which you can put in monthly payment, down payment, trade-in, sales tax, interest rate, term, and work through to get a vehicle price and a monthly payment. So you can play with those numbers back and forth. It's a pretty nice tool to help figure out, geez, I want to spend $400 a month. Well, what does that equate to in purchasing power on a new vehicle or a pre-owned vehicle? So let the research begin. Make a list. I'm actually going through this exact process currently with our youngest daughter. She's wanting to buy a different vehicle. She's moved to a better job and she has a little more disposable income. So her and I were talking on the phone last night as she lives in Los Angeles about the process of making a list, narrow it down to the 2 or 3 cars you really want, do some homework on those cars, figure out what's important, miles per gallon, safety features, do a blog on the car. You can see there's all kinds of information out there on whatever type of car you're looking for. Do your side-by-side comparisons. She's comparing a Lexus NX with an Audi Q3 and a Mercedes GLC. So she's doing the same thing, spreading it out on a piece of paper and figuring out, geez, what makes the most sense based on your budget and the types of cars that are out there to get an idea of what you're really looking for. Know what is a reasonable selling price. If you're looking at a new vehicle, like I said, you can go to TrueCar, one of the great sources out there, and they have a bell curve. You can put in the year, make, model, options, and color of vehicle, and it'll give you a bell curve on what is a good price, what is a great price. TrueCar doesn't sell cars. We are a TrueCar certified dealer. So we do business with TrueCar and we provide data to them so that they can roll up the data and share it with you, the consumer, the credit union member, to have a better knowledge of what should I be paying for this vehicle. Of course, in this market, it's a little different. We'll address that a little bit later, but on a normal ongoing market, what's a great price to pay for a car? On a pre-owned car, there's tons of history reports out there. One of the main ones we use all the time is Carfax. We believe in transparency, so we look at Carfax, AutoCheck, and Inventus, all 3 reports that are out there to get a background on a car, on a pre-owned car. Josh, you just popped up. Do you have a question?
Oh yeah, did you see me pop up? I'm sorry.
Okay, I just saw you pop up. I thought maybe you had a question. I'd slow down for a second.
Yeah, I hate to interrupt you. I know you're on a roll, but there was a question about pricing. How do you guarantee getting the factory invoice from a dealer, invoice pricing?
Well, I can guarantee you I can get the invoice, but that doesn't mean I'm going to pay the invoice. So it's right now, you're probably not going to be paying invoice for any type of vehicle out there. Pre-pandemic, yes, we were selling brand new vehicles at or below invoice price, but right now with the shortage of the chips that are out there, the supply and demand that's there, and the lack of cars, consumers are paying on average $3,000 to $6,000 over a window sticker for cars today. So right now it's not possible to guarantee anybody any price just because of the small number of cars that are available in the market and the large demand coming out of this pandemic. There's a lot of people out there that are wanting to buy a different car, whether it's a new car or used car. And right now we've seen prices go up on pre-owned vehicles in the last 45 days, 30%. And we've seen availability of new cars go down about 70%. So it makes it difficult. It puts a big squeeze on pricing to the consumer. Is it getting better? Yes, it's starting to get better. We're seeing pricing drop on pre-owned cars starting this week, and we're seeing new car inventory starting to come back. We have probably 15 or 20 vehicles for CalCoast members that we have ordered that are still not in from Toyota, Honda, Ford, General Motors. So it's starting to loosen up, but it has been very challenging for the last 60 days, just because the fact that the manufacturers slowed down with all their vendors, including the computer chips. And unfortunately, the computer chips take about a 6-month lag to get caught back up. So that's caused this problem.
That makes sense. So with the increase in prices right now, would it be better to wait until next year to buy a car?
Well, yeah, in theory, yes. But in reality, there's people out there that need a car today. For whatever reason, you know, they've damaged their car, they've had a family and they need a bigger car, or, you know, it's just time for them to get a different car. So we are able to still negotiate and get some great prices on brand new cars. I had a member yesterday, Josh, that you and I spoke about, that was looking for a new Toyota. And she said she'd been out to several dealers and did some price shopping, and no one would work with her. And I was able to find a car that matched what she was looking for. And I think my price was about $5,200 better than her best price. So, I mean, there's still some wiggle room out there. There's still some availability of cars. But, you know, if you could hold off until August, you're probably going to save another $1,000 or $1,500 on a newer pre-owned car today. So that's just where we are.
Great.
So other items to consider back in the process. Do you have a down payment? Where are you at in putting together your plan to go attack and find the car that you're looking for? Are you going to trade in or sell your current vehicle? Right now, today, pre-owned vehicles are worth a premium. Just again, because of the shortness of new cars and the fact that everyone is out there trying to acquire pre-owned cars because there's no new cars available, it just drives up the price based on supply and demand. So if you're considering, contemplating, thinking about selling or just trading in your vehicle, it's a great time. It's a great time. It's worth more now than it has been in the last 2 years. Next thing is registration fees. How much do I have to pay for tax and license on a vehicle? The tax is based on the zip code that you live in. It's anywhere from 7.75% to 9% in California. So wherever you live, that's what you have to pay wherever you're going to register the car. License fees you can look up at dmv.ca. When we help members buy cars, we do all of that for you. We take care of and process all the DMV and tax and license. But again, it's something that you have to consider, that you need to put into the calculation when you're buying a car. Typically, that runs about 9% total. So if you're looking at buying a $10,000 car, it's about $900. If you're looking at a $20,000 car, it's about $1,800. Simple 9%. So figure that into your calculations when you're trying to figure out what is the amount of vehicle that I can afford. Auto insurance. I'm sure the fine guys from Wawanesa are going to talk a little bit about auto insurance, but again, getting a quote for your insurance, it really just depends on your driving habits, how many miles you drive, your history, and the car you're buying. You know, if you're buying a Toyota Corolla, you're going to get an insurance quote of X. If you're buying a new McLaren, you're going to get insurance quotes of 10 times that. So just that all factors into what you're paying for a car. Warranty, understand what the warranty is on the vehicle. Most vehicles today have a 5-year, 60,000 mile powertrain warranty, a 3-year, 36-month bumper to bumper warranty. And some of the vehicles now have a 10-year, 100,000 mile warranty, only if you're the first owner on the vehicle. If you're the second owner, it reverts back to 5-year, 60. So again, that's something to look at. Also, the credit union has an extended warranty program, which is very affordable, and I think it's a great investment. Cars today are made of a lot of different computers, and when computers go bad, they're expensive to fix, and the credit union's MRC program is a great way to protect that moving forward. Also, other loan products to talk about with CalCoast is they have their Coast Guard Plus programs. which is for loss of life. If you have an auto loan and you happen to be the primary borrower and you pass away, there is a program that will pay off the vehicle. If you get disabled, it pays off the vehicle. So there's also the guaranteed asset protection program, which is when if you have a vehicle that's in an accident and the insurance company says they're going to give you $15,000 for your car, but you owe $20,000 still to the credit union, that gap coverage is covered then by the credit union. It's very affordable. So if you have an auto loan and you haven't put down a significant down payment, I highly suggest you look at the gap program. Finishing up your homework, determine how much car you can afford. Before you go to the dealer, sit down and budget with a piece of paper and figure out, okay, I can afford a $375 payment. I can afford a $700 a month payment. Whatever that is, crunch the numbers and go through the process so you know what you can afford when you get there. Research your vehicles, narrow it down to 2 or 3 vehicles, and then go drive those vehicles. I believe in seat time. I tell credit union members all the time, go to a dealer and drive the cars. If you want to go to a place where you're not going to be accosted and you can drive lots of different vehicles, I like sending people to CarMax. I think they're very nice. They're very appreciative of the opportunity to talk to you. I think their prices are astronomical high, but they have a lot of cars for you to test drive, and you can go out and test drive 5 or 6 cars and come back and then make a better decision. So I like doing that. But you're welcome to come to our store also and test drive cars. We have cars here for you to test drive if you'd like. So just putting it out there that I think there's a lot of choices for you to go figure out the type of car that you're looking for. Again, we talked about tax and license, insurance costs. Now you're ready to take the next step. What's the next step? Probably going to say finance pretty soon here. There it is. And you push the button again. Okay, let's talk about the process of underwriting through the credit union. What is the credit union going to do? Credit union is going to ask you for information on you. They're going to ask you to fill out a credit app. You can do that by calling the info center. You can do it online. Don't think you can mail it in, but I'm sure you can drop by any branch and pick up an application and fill it out and turn it back in. So what does the credit union do with that information? It's called the 3 C's. They're going to look at capacity, character, and collateral. Quickly, what is that? Capacity is can you afford the debt? Do you have enough disposable income to comfortably make that payment? If you don't, you're probably not going to make the payment on time. The credit union is probably not going to approve the loan. Ratios. DTI is debt to income, PTI is payment to income, disposable income they're looking at. So the credit union is going to run some ratios based on how much money you make, how much money you bring home, what are your expenses, how much disposable income you have. All credit on the report is deemed yours, even if you're a cosigner. So if you cosign for one of your kids for a car, they're going to consider that your debt, not your kids. So if that's the case, go to the credit union, get the credit union loan officer to write a loan for your son or daughter and get you off the loan. Character, what's this? It's the likelihood of your repayment based on history, stability, based on how long you've been on your job, how long you've been in your home. So that's the second C, which is character. They're looking at just how stable are you. Collateral. Collateral is the vehicle. They're looking at what is the vehicle's valuation? What is the relationship between the loan requested and the value of the vehicle? So they're going to be asking for Kelley Blue Book. We provide them retail, wholesale Kelley Blue Book values. The credit union has a formula they look at, and there's an amount that they will extend based on that Kelley Blue Book. So that's all important. And of course, the older the vehicle is, the less the credit union is going to fund on it because they know the life of the vehicle may not live as long as you're going to be paying on the car. So on a, let's say it's a 2012 vehicle, they're probably only going to finance 80% loan to value versus if it's a 2019 vehicle, they may finance 110% loan to value, depending on your individual credit situation. So that's how the 3 C's work. Let's talk about refinance. Let's say you have a vehicle now and you want to refinance it. The credit union is going to need a 10-day payoff. So they're going to need to know what the current payoff balance is on the card. They're going to need to know what the Kelley Blue Book value is. You can find that by going to kbb.com. There'll be a $15 transfer fee if you want to refinance. If you're doing a deal with a private party and you're purchasing a vehicle, you can also do that. You typically need to go to the branch with the car and the member that the person you're buying the car from. You're going to realize that you had a 10% tax you're going to have to pay between the tax and license on the vehicle. May need a down payment depending on the car. So those are all things that get into the purchase price part of acquiring a vehicle and getting a loan from the credit union. They also do lease buyout. So let's say you've leased a vehicle, you're 3 years into the lease, and who better to buy a vehicle from than yourself? So if you've leased a new vehicle, you've driven it for a few years, and now you decide, hey, I like this car, let's just keep it. You can go to the credit union with the payoff statement from the leasing company, pay the taxes, license fee transfer, you're gonna have to smog the vehicle, and then the credit union would finance the balance on the vehicle, of course, based on the 3 C's that we just discussed. How to get pre-approved. I think this is one of the most important things that we need to slow down and talk about for a couple minutes. And that is because it's like today in the housing market. If you're going to go out and look at a new house to buy and you're not pre-approved, they don't take you very seriously because you're not approved. It takes a little bit of a process to get approved. I believe to give you the most buying power, you should be pre-approved when you walk into a credit union. Excuse me, when you walk into the dealership. So you need to get pre-approved before you go out and do your shopping. So when you're doing that, you can do it by mail, by visiting a branch. You can do it by phone. You can do it by calling the info center, or you can do it from your telephone. So there's multitude of ways that you can get pre-approved with the credit union. But I think that gives you more buying power when you go out and visit dealers, because the dealer will take you seriously when you say, geez, I'm already pre-approved. I'm pre-approved for $40,000. I'm here to look at this new Camry and I'd like to test drive the car. So they're going to take you seriously, that they don't have to try and get you pre-approved somewhere else. Also, once you get pre-approved, you can request what's called your drive your deal check. After you've been approved, the drive your deal check will also give you more buying power when you're going out to the dealer. So I think that once you get pre-approved at the branch, ask for a drive your deal check. What to expect at a car dealership. I started New Cars Inc. in 1986. Before that, I pretty much grew up at a Ford dealership. My father was with Ford Motor Company until 1969. So I grew up at an auto dealership. So I like helping people buy cars. I think it's a fun business. That's why I've continued to be in this business for 35 years. It's fun. We've helped 85,000 people buy cars. But you need to remember that it's not an adversarial relationship, but they want to make as much money as possible off of you when you're there to buy a car. So do your homework before you go. Car buying is a two-step process. One is the sales side of it. The second part is the paperwork, which is called the F&I process. So when you go in to buy a car, you're going to go in and look at the car, test drive the car, smell the car, get excited, like the car. But if you've already done your homework, you know mathematically what you can afford, how much money you can put down, how much money you think your trade-in is worth. You're going to go through a process with the salesperson and the sales manager to buy a car. You're going to narrow it down to how much money you need down, how much they're giving you for the trade-in, what your monthly payment is, ballpark. They'll give you the numbers. You go, great, that's it. I want the car. And you go, oh, process is over. I think I'm done. You're not. You're halfway done. Now you're going to go into the F&I part of the business, which is the paperwork. And there's where the dealer is going to try and earn your financing versus you going back to the credit union. They're going to try and sell you the gap at a higher price, paint and fabric sealant, low jack, extended warranty. Those are all additional items that at the second part of the sale, they're going to try and convince you by telling you how little this increases your monthly payment and you should participate. So what do you avoid? Avoid the fact that they're going to try and work you on settling for a longer term and lower payments. That means you're going to pay more interest. That means the car dealer is going to make more money. I always suggest to people, do as short of a term as you can, possibly with a comfortable payment. You know, if you're like an 84-month payment, but you can live with a 72-month payment or a 60-month payment, I would suggest you try and find a way, maybe put a little more money down or buy a car with a few less options to get a shorter term. Because reality is, in 5 years from now, 60 months, you're probably going to want a different car. And if you still have 2 more years on the loan, you may be in a negative equity position. So I always suggest try and keep it to 60, at the most 72 on the term. Deferral down payment, don't ever write a post-dated check. If you can't write the check that's good today for the down payment, stop, hold off, save up a little bit more money, and then go back in when you have a live cash down payment. Be aware of leasing options. Leasing is great if you own a company, you own your own business, and you can use pre-tax dollars. Of course, I have to say I'm not an attorney and I'm not an accountant, so I can't give you advice on leasing. But if you choose to do leasing, we can do leasing for you on any make or model of car other than Tesla. Can't help you with a new Tesla, but everything else we can get. If you want to lease it, it's a great way to buy a vehicle if you have how do I say this, champagne taste and a beer budget. So if you really like that high-end BMW, but you don't want to make the payment on it, $800 a month to buy it, you can probably lease it for $500 a month. And no one knows you're leasing the car. You're just driving the car. Hi, Josh.
Hello. So we have a lot of questions coming in. Wanted to run some of them by you.
Okay.
One of them is that they said, I like to compete dealers, but dealers often hesitate to give you written quotes because they know that you will use that to show other dealers. How do I get dealers to give me their best written quote?
That's been, it's kind of the nemesis of the competition between dealers out there. So let me answer that a different way. Number one, let's just take a particular vehicle in this example. Let's say it's a new Ford Mustang. Every single Ford dealer on a Mustang or every single Toyota dealer on a Camry pays the same price for that car. So let's say the cost of the car is $20,000 and the retail price of the car is $22,000. There's not thousands of dollars of room between dealer cost and MSRP. Used to be 20 years ago, there was $3,000 to $4,000. Now we're seeing anywhere from $1,000 to $2,000 in room. So the question is how much is saving a few $100s worth your time? Because reality is everybody pays the same price for the car. And here's the kicker. According to JD Power, who does all the analysis out there, within 2%, we all pay the same price for new cars. So we have an antiquated model, which is the car business, and it should be that everybody pays the same price. When you go in to buy a new Honda Accord, Toyota Camry, Ford Mustang, it should be you pick out the options, you add it up, that's the price you pay. Unfortunately, the dealers, the franchise dealers, like this antiquated model to where they want to negotiate with you on the price of the car. But reality is high to low, according to JD Power, who does all the independent surveys, that delta is about 2% difference. So it's not a huge difference. What I would suggest you do is when you go in, pick someone you like at the dealership to talk with this through. What they don't like is they don't like shoppers over the phone and over the internet that are calling and asking for the best price and send it to me. They don't want to do that because you can't buy a car over the phone or over the internet. You have to buy a vehicle and sign in person. Our model's a little different because we don't have you sign anything until we're delivering the car to you. And then at that point in time, you're going to sign the paperwork and buy the car. We do it all based on relationship because we're the credit unions auto buying service. But at the dealership level, if you're calling 5 different Toyota dealers and you're just over the phone with them, asking them to send you their best quote, they're probably not going to do that. They probably just don't want to do that because that's what we call a race to the bottom. Everyone's racing to see how much can I lose on this car. Car dealers are not in business to do that, even though they have an internet department. The internet department's whole goal is to set an appointment to get you to come in. So if you want to get the best price, pick out 1 or 2 dealers to go to, find a great auto buying service to check pricing on, do a little homework on TrueCar. The nicer you are to dealers, the nicer dealers will be to you. They don't want to be in an adversarial relationship with you, but they're happy to go there if they think they're going to give up gross. Next question.
Yeah.
Hopefully that answered that.
Kind of related to that question. Who's the best person to talk to at a dealership? Is it the sales rep, online rep, or a fleet rep? Like who, if you're going to go in, who do you talk to? Who's the best?
Well, it's kind of a loaded question because if you're buying, we deal with fleet managers because we're buying thousands of cars every single year. So wood dealing in large quantities, pre-negotiated pricing, and it's based on the number of cars that we buy, based on the membership of the credit unions, so we get better pricing. As an individual consumer going in to buy a car, if you're going in and looking at a new car, I would sit down with a salesperson. I would go on a test drive with them. I would figure out what their best price is. They're going to bring out a piece of paper and do what they call a Foursquare, which is how much money do you have down, what's your trade-in worth, how long of a term are you going to do in monthly payment. At that point in time, I would just say, can I speak to a new car manager, please? Appreciate everything you've done for me, but I would just like to talk to a new car manager who can make a decision on selling me a car, because you, the salesman, can't.
All right. What about paying cash for a new car? Is it better to pay all in cash for a new or used car? And if you don't have a trade-in, do you have to have a higher down payment?
Cash is the cheapest way to buy a car. It's when you pay cash for a car, you're going to end up paying less for that car than if you financed it, because you have finance charges, way less than if you lease the car. So cash is the best way to buy a car mathematically. The challenge is it's a depreciating asset. Taking out the last 4 or 5 months of this anomaly of this pandemic and the shortage of new cars, where cars now are appreciating, not depreciating, but in the normal world, vehicles are a depreciating asset. So if you don't want to tie up $25,000 paying for a depreciating asset that as you drive it off the lot is now worth $22,000, then go to the credit union and finance it over 60 months. Do something better with your cash, buy stocks, bond, Tesla stock, whatever you want to buy. Sorry, I'm not an advocate of Tesla stock, but I just used it as a reference. Buy something that will possibly appreciate or make you money. Buy real estate, buy something else. So that's my opinion. I suggest to my kids, finance the car through your credit union, put 10% down, finance it for a shorter term. If you can't handle the payment at 60 months, then find a different car to buy that you can't afford the payment. But again, I'm old school, and you know how dads are giving their daughters advice.
All right. We had some requests to talk about the drive your deal check one more time. Can you kind of just go over that real quick once more?
Absolutely. See, once you get approved for a loan at Cal Coast, you can go in and ask any of the employees at the branch for a drive your deal check. It looks like a draft, but it's a check, and you can fill it out. And it gives you more buying power when you get into a dealership and you're negotiating to buy a car, because that basically is your loan docs and the funds they want for the car. So they're going to get paid that day on the car. So that makes it easy for them and gives you more buying power, because you don't have to go in and say, you know, let me give you a credit app so you can run my credit and see what I'm approved at. And they're going to come back at a 5 or 6% interest rate through a manufacturer when you have a 1.9, 2.9 loan through Cal Coast.
All right. Question about New Cars Inc. Can you help someone that is a member but lives in Arizona?
Yes. We can. We deliver vehicles to Scottsdale and places all over in Arizona, and Phoenix, Tucson. So yes, we can help.
All right. And I think you mentioned, as far as trying to find the best fair market price for a vehicle, you always mention TrueCar. Is there other sources that you would recommend as well?
Kelley Blue Book, Edmunds, Motor Trend. There's quite a few different sources out there. What I like about TrueCar is, number one, they're a trusted partner of Cal Coast, so that gives them, in my opinion, a lot of credence. And they give you a bell curve, so you can kind of see what is a good and great price based on the vehicle you're looking for, based on supply and demand and timeline. So, you know, believe it or not, prices of cars in Los Angeles are higher than they are in San Diego for whatever reason. So it's important to put in where you live. It's important to figure out pricing on the car, and then you can get a bell curve to get an idea of, okay, is this a highly demand car or not? I mean, if you're today you're looking to buy a Toyota Tundra pickup truck, you're going to be paying window sticker or more for the truck just because there are not any out there. If you're looking to buy a Toyota Corolla, and there's quite a few of them out there, I can probably get you one for less than MSRP, probably close to dealer invoice. So it just depends on the car that you're looking for, but the TrueCar gives you that bell curve. But there's a lot of other sources out there for you to look at.
Okay, so if someone is using New Cars Inc. to purchase a new or used vehicle, you don't necessarily need a driver deal check, or is that still?
No, you don't have to have it. No, you don't have to have a driver deal check. We deliver the car to your home, to your branch, to the branch that you do business with, or to your office. You'll sign the paperwork with us, the purchase order, the proof of insurance, all the DMV forms. Then we will go back to our corporate office and we send everything in to Central Lending. Central Lending will email the loan docs directly to the credit union member. You sign everything online. We're done. The DMV gets processed. The plates will come to you in the mail in 60 to 90 days.
All right. When it comes to buyouts on leased cars, is that something that's negotiable, the price on a buyout? Or that's something you sign for in the contract when you lease it, right?
Yeah, they'll tell you the residual value initially. In my opinion, you should look at that number and say, great, is that a good price or is that a bad price? Am I paying way too much for that car or not enough? I mean, if I had a 3-year-old vehicle that was coming to the end of the term on my lease and I looked at the residual and it said it was worth $15,000, I'd probably drive that car past CarMax and get an appraisal on the car and see what does CarMax say that car is worth, or bring it here and let us appraise it for you and figure out what is the valuation of that car. Is that a good buy at that price, or is that, boy, that's $3,000 over retail Kelley Blue Book? That's too much for that car. Let's go buy something else.
All right, and then we have some first-time car buyers here with us today, and just wanted to know what your advice is and how do you evaluate whether a service contract being offered is a good deal, considering the services included, like the time, pricing, all that good stuff?
Okay, let's talk about first-time buyers. I would highly suggest, if you're a first-time buyer, to get pre-approved at the credit union. Go to a credit union branch, sit down with the PFR, one of the loan folks, tell them what you're doing. Tell them, is your parents going to co-sign for you? How long have you been on the job? What is your disposable income? Figure out first what you can get a pre-approval loan through the credit union for that amount. Then start from there, picking out what type of car fits into that budget. I see so many times members come in, first-time buyer, looking at a car, look at a beautiful black Acura they love that's priced at $21,900, and then they find out that, wow, geez, I need $3,500 down and the payment's $450 a month. I can't afford either one of those things. So I always suggest you get pre-approved first before you go out and do your shopping. Service contracts. I think service contracts are a great investment. There's some vehicles out there that I think it's more valuable on to have than other vehicles. As an example, a Toyota Camry, in my opinion, probably don't need a service contract on the car. They just don't break. If you're looking at, and I'm not picking on any particular car, but if you're looking at a Chevrolet Traverse, I would highly recommend you get a service contract on the car. If you just look up background history on the cars, you're going to find that there's all kinds of rating companies out there that will tell you what their opinion is of the longevity of that car. So if it's a vehicle that needs a little help, you like the car, but you want to protect your investment, I would buy an extended warranty on that car.
All right, so I think we have a break in the questions, but Kevin, I believe you have your contact info up there. Let's make sure we keep that up there if we can. Yeah, there we go. And then I think you have a little bit more to talk about.
Yeah, just our company's been around for 35 years. Our whole goal is to save people time, hassle, and money in getting a car. It's really a concierge service. I'm not here, my team's not here to sell you anything. They're here to help you buy what you want to buy. Cars are fun. My challenge with the business is it's an antiquated model. It just doesn't seem to work with the technology and the information that we have today. That's why there's so many new companies like Vroom that are popping up that are saying, their whole claim to fame is they're going to deliver a car to your home. Well, so will everybody else today after this last year we've had. So there's lots of choices out there. Again, right now, we're at probably the biggest anomaly I've ever seen in my 35 years being in this business is the pricing structure because of the shortage of the chips, which is slowing down the influx of new cars, which is causing the daily rental car companies like Hertz and Avis to go out into the market and buy large numbers of pre-owned vehicles to have, so that when you go to rent a vehicle this summer and you want to go on a trip to Yosemite or wherever you want to go, there's cars there for you to rent. They're not brand new cars anymore, but at least they'll have something for you to rent. I think the ship will right itself by the time we get to August. There'll be a supply of new cars coming in, pricing of used cars will drop, and we'll get back to some sort of pre-pandemic normalcy on the car market. So I think it will correct itself, but which is, it's been a tough 15 months for all of us. And I just think we're blessed to still be here. So, some of us aren't. So God willing, we'll be able to help your members get any make or model of car they want, and hopefully at a better price in the next 60 days.
Well, thanks so much, Kevin. Again, there's so much information that we can go over. There's more questions coming in, maybe we can go over at the end, but I want to put into the chat the link to our website that has Kevin's company listed. We actually offer our members a discounted rate if you finance a vehicle through us and utilize Kevin's auto buying services. So feel free to visit that link anytime, and Kevin can help you out. The contact info is also up on the screen here. So with that, thanks again, Kevin, for presenting. If you want to hang out for a little bit, we're going to switch gears. And now I'd like to bring Leo Morales and Jude Silva from Wawanesa in. And let's see, I'm going to ask Leo, actually, are you able to share your screen right now, Leo?
Yeah, let me see. Let me just get situated here.
All right, while you're doing that, so I introduced Leo and Jude at the beginning, but just to kind of reintroduce them, Leo is the marketing manager for U.S. operations for Wawanesa, and Jude De Silva is sales manager, and they're going to talk to us about some of the best practices in regards to once you buy a vehicle. Now, what's the next step, right? You got to get insurance. So how do you go about doing that? What do you look at? What are the pitfalls? What are the best things to know when you're looking at insurance? So we'll talk a little bit about that. And it looks like, Leo, you have access and you're ready to go. Perfect. All right, so take it away.
Okay, just a second here. Move this over out of the way. Well, I just want to say, wow, Kevin, what a great presentation. So much great information. Really just well done. And I certainly learned a couple of things there. And I've been astonished at kind of the market dynamics that are happening right now. We are seeing at Wawanesa a good amount of people adding vehicles to their account. It's kind of like Kevin mentioned, that pent-up demand of people as they're emerging out of the pandemic, coming and seeking with some disposable income to either get a new vehicle or they waited on it, but there's a need for it. And so we're seeing a lot of members add their vehicles. But I want to start by saying thank you to Kevin, but also, my name is Leo Morales. I'm the marketing manager at Wawanesa, coming up on my 10-year anniversary with Wawanesa. And I also have my peer, Jude De Silva, who's our sales manager. And we're going to quickly just go over a few slides talking about some insurance basics. We're going to go over some frequently asked questions and provide some tips. And then we'll tell you a little bit about Wawanesa and a special promotion that we have for Cal Coast Credit Union members. So let's see if I can go to my first slide here. Okay, well, we wanted to make it very simple. And really with car insurance, there's really three primary coverages that are offered for auto insurance. And the first one is liability insurance. And what that is coverage that protects you in case you injure somebody or you have property damage to someone else other than yourself or your vehicle. And that is the base coverage that is required by California law for you to own and operate a vehicle in the state of California. There's different limits that you can have with your liability. But if you hurt somebody or you injure somebody and it's your fault and you cause physical damage to their vehicle or bodily injury to them, you're going to be on the hook for that. And this coverage covers that at certain limits. The basic limit in the state of California is $15,000 for injury to one individual, $30,000 for injury to two or more individuals for that occurrence, and $5,000 as a max for property damage. Now, while those are the state minimums, and the state seeks to try and ensure that all drivers on the road have some form of insurance coverage, those are very minimum limits. And with medical inflation, the cost to repair vehicles continuing to increase because of sensors and bumpers, smart windshield wipers, and those kinds of things, and the way that cars are made, the cost to repair are continuing to increase, as well as the cost of medical inflation when someone is injured. So 1535, as it's commonly referred to, is the minimum amount, and any amount that that is incurred beyond that, you are personally liable for. So I would just say for a minimal amount of an increase in your premium, and it's really not very much to increase your coverages for liability, you can increase it to 25 or 50,000, 100 or 300,000. There's many options that insurers offer you to increase your liability coverage. A good example with liabilities, if you hit somebody, you're at fault, and heaven forbid there's a child in the other car that's injured, the costs for something like that could go well beyond those limits. Secondly is comprehensive coverage. And what this coverage is, anything, the way I like to describe comprehensive coverage is anything that's beyond your control. And there's some examples in that second a column there, like fire, theft, vandalism, a glass break. Those are things that comprehensive coverage would cover. And speaking to what Kevin had, just kind of parlaying off what Kevin had mentioned about financing, if you finance a vehicle, typically when you finance a vehicle, those financing companies, the financer requires that you maintain certain limits on the car to protect the vehicle. And then lastly, there's collision coverage. And this coverage is something when you collide with another vehicle, a building, a tree falls on your car, you run into a pole, those are things, anything that's a collision. There are optional coverages beyond these three, things like roadside assistance, rental car expense. Obviously, roadside assistance is probably the best example is AAA. When something goes wrong, you lock your keys in your car, mechanical breakdown, flat tire, you run out of gas. Having roadside assistance can be can provide peace of mind and security, particularly for you, your loved ones, or even your children, should something happen on the road. And then there's things like rental car expense, which is just an allotment that can be included in your insurance policy that will cover your rental car for a period of time at a certain amount per day. And you can have various limits from $30, $45, $50, $60 a day, depending on what make, model your car or what you're accustomed to. But there's varying limits for rental car expense coverage. I'll move to the next slide. I just wanted to go over the basics of the deductible. And this is a scenario that I wanted to present just to kind of illustrate how the deductible plays. If you get into an accident, the car insurance, the insurance company will cover the cost of a covered claim after you meet your deductible obligation. An example is, if you get into an accident, you take your car in, you file a claim, and you take your car in to get repaired. The amount of that repair is $5,500, $5,500, and you have a $500 deductible. You have to pay that $500 deductible first, and then the insurance will cover the rest of that claim up to the total amount. So in a $5,500 cost to repair, you would pay $500, the insurance company would pay the $5,000. With a deductible, and the tip here is a higher deductible means a lower premium. Why? Because you, as the person who's seeking the insurance, will pay more out of pocket. Therefore, that will theoretically reduce what the insurance company may have to pay. Therefore, your premium should lower. Conversely, the lower your deductible means the less out-of-pocket expenses you're going to pay, then the premium on your insurance coverage will be slightly higher. So it's kind of an inverse relationship. What I'm going to do now is I'm going to turn it over to my peer, Jude Silva, to go over some tips and some frequently asked questions.
Thanks, Leo. Good afternoon, everyone. So just give some basic information. I mean, I think Kevin covered a lot of great stuff about shopping for a car. You know, specifically, I know getting pre-approved when you're going to buy a car. I know I paid the price when I was really young going to buy a car without pre-approval, and paying a much higher interest rate than for a car. So I think that was a great tip. So shopping for insurance. So there's three ways you can buy insurance, right? You can buy insurance through a broker, and typically brokers are appointed through multiple companies, and they can shop different companies and get your price. But typically with the brokers, you end up paying some fees and commissions. And then the second option is you can buy through what's called agents, but they're appointed by one company. So for example, State Farm, Allstate, Farmers, those type of companies have agents that's appointed just to sell their product, right? So, and those agents basically get a commission on their sales. So there's a cost attached to that policy that you purchase. And then the third option is you buy it through a direct company like Wawanesa, Geico, Progressive type of company. That's sort of the consumers are starting to shift to that direction a lot more because what they're typically finding is the insurance is cheaper if you go directly through a company. So those are your three options. Some people prefer to have an agent to really do all the work for them and thinking for them. But a lot of the consumers are starting to basically go, all right, this is not that complicated. I can do a little research and buy direct from a company and save some money. So three things to think about, three different options for you to think about when you're shopping for insurance. Generally speaking, I recommend that you shop for insurance at least every couple of years. The marketplace changes, insurance companies changes their rates. Often, Leo mentioned about the cost of vehicle repairs are going up all the time. So companies have to adjust their rates consistently to keep up with those costs, right? So it makes sense for you to shop around and compare your prices with the existing one you have. And it's really important when you're shopping, shop what you have right now so you have an apples to apple comparison. So, for example, if you have a policy with full coverage that includes, say, medical payments and uninsured motorist coverage, you can call a company and go, can I get a quote for full coverage? And they might just give you liability, comprehensive, and collision that covers your legal requirement, covers your car, but might not add those additional coverages. So it's really important when you're shopping that you have your deck page, your coverage policy in front of you, so you can actually do an apples to apple comparison. Typical research that we've done shows that most customers, when they're shopping for insurance, will shop about three companies. So I recommend that you check your rates with a couple of companies every 2 or 3 companies every couple of years, and there's probably a good chance that you can save some money. One of the great ways to keep your insurance rates low is really your driving record, right? So there are several factors that affects your insurance rates: where you live, how many years of driving experience you have, what kind of car you drive, what kind of coverages you buy, and obviously the number one factor is what kind of driving record you have. So typically in the state of California, by law, if you have a good driving record, all companies are required to give you a 20% discount from the base rate. So if you have a good driving record with no accidents, chances are pretty good that your rates are going to be good with a lot of companies. But even with that consideration, you still want to shop around because the rates, like I said, varies quite a bit from company to company. Discounts, some companies offer a lot of discounts, to make the policy seem like a better deal. So when you shopping around, ask what discounts are available and see if there are things that you might be able to qualify for. But at the end of the day, you're really looking for a reputable company with similar type of coverages that you need. When I say the coverages you need is, for example, if you're a homeowner, you don't want to buy state limits, which is 50 and 30 bodily injury coverages, because that's not going to be enough to give you protection in case you run into get into an accident and the losses are more than $30,000. So, typically we recommend if you own a house, you at least buy 100, 300,000 bodily injury limits and at least $50,000 in property damage. Kevin touched on the gap insurance. That is something definitely worth considering. If you're going to buy a car, a high value car with a small down payment, typically in that first year or two, if you have a loss, that the insurance company is going to pay the actual value of the car at the time of the loss. You might finance the car for $35,000. Your car might be only worth, 35, maybe a couple of $1,000s less at the time of a loss. You're going to be short a couple of $1,000s if you don't have gap insurance. So it's it's an individual decision. It's a risk you take, something to really seriously consider if you are going to buy a car with a really small down payment, and especially if it's a high value car. And then the next one is leasing a vehicle. So when you're shopping for insurance, your insurance rate for a leased vehicle and finance vehicle might be different. For example, if you lease a car, typically the lease company will require you to carry 100, 300,000 bodily injury limits. But if you finance a car, those limitations really does not exist. They only require that you carry at least the state minimum limits. So that is something you want to think about when you're shopping, if you're going to if you're going to lease a car or finance a car. And then the last point on this slide is, can I drive the car off the lot without securing auto insurance? Most companies, if you're already insured, you have full coverage on an existing vehicle, will give you 30 days of coverage automatically on a vehicle that you purchase. So if you buy a car on a Saturday or Sunday, you can call them during the week and add that car, and your vehicle will be covered from the time you drive off the lot. But I recommend that you always call your insurance company and your agent and find out, do they have that type of grace period? So that way you know that you're secure in case something happens after you leave the lot.
All right, thank you, Jude. I'm going to cover this next slide. I want to tell everyone just a little bit about Wawanesa Insurance. We were founded in 1896. We've been around for 125 years, serving our members' needs. And really, Wawanesa Insurance looks at itself as more than just an auto insurance company. We've been around, like I said, 125 plus years, and we believe that, the company builds a safer, more sustainable, healthier future for our members and communities by offering coverage that protects our policyholders and the community. And that really translates and aligns with what our core values are as a company. I mean, service to our members is priority number one. That is what everybody, the over 800 employees that we have are focused on every day, is serving our customers' needs. We're known for being fair and transparent in our dealings, not only when you purchase a policy, but when you file a claim. That's one of the hallmarks of our company. And one of the things that we align very closely with Cal Coast Credit Union is the sense of community and our value of community. And that's really where our organizations are very simpatico. That's how we met Cal Coast Credit Union. We share that value. Currently, right now, Wawanesa's primary core product is auto insurance. We've been offering it in California since 1975. We've been in the Mission Valley area since that time in just a few locations, and we still remain there. We have 750 employees locally here in San Diego, sales, service, marketing, claims, all handled right here in San Diego. So it's San Diegans taking care of San Diegans. And one of the things I want to point out is we were founded as a mutual insurance company, which means we treat our policyholders, our members, like owners of the company. And that's also very aligned to the credit union model, who operates as a nonprofit in a very similar fashion. And we've been headquartered in San Diego since 1975. And I'm proud to say that of the last 10 years, Wawanesa has won, based on the J.D. Power Auto Insurance study, of the last 10 years, Wawanesa has been awarded the highest customer satisfaction among all auto insurers in California, 6 of the last 10 years. And I'm happy to report we won it in 2012, 13, 14, and 15. And then we won it again in 2021. And we just were awarded it, one day ago by J.D. Power for 2022 as well. So We're very proud of that. And the reason we're proud of that is because that is the voice in the survey, the voice of the customer, of our customers are being surveyed and compared against other insurers in California. So we're a smaller company that treats our customers right, but we like to say we deliver world-class service and attention to our policyholders. And with that in mind, the last slide that I'd just like to present is the fact that, you know, we've aligned with CalCoast Credit Union to offer a special and exclusive discount only for CalCoast Credit Union members. We filed this with the California Department of Insurance, and CalCoast Credit Union is the only one that we offer this to. You get an additional discount when you're an existing member of CalCoast Credit Union and you purchase a policy from Wawanesa. So I would encourage you guys, if you guys are in the market looking for an auto insurance policy, to call us and give us a quote. But what I would also say to you is we're in a soft sell. We're not here to sell you insurance. What I would encourage you, if you have questions on your existing auto insurance policy, Jude sales agents are experts in the insurance field. And one of the things that's a hallmark for Wawanesa is us being open to answering questions. Any insurance company that you deal with should be open to answering your questions. If they're not transparent in that regard, I would seriously question how they would handle and treat you during a claim. But our insurance agents are there to help you answer questions. Take your deck page if you want to ask questions to get a better understanding of coverages, what you need and what may fit your lifestyle, as well as the risks you hold, or you're having a life-changing event, having a kid, getting married, getting a divorce, separating off your body. Our agents can answer any questions you have. And what you can also do is if you'd like to compare your policy with a quote from Wawanesa, you can certainly do so, and make sure that you mention you're a CalCoast member so that they can apply that exclusive discount for you. With that, I would just say thank you and appreciate the opportunity.
Said it better myself, Leo, that we are simpatico, definitely. We are excited and absolutely just, I think I speak on behalf of everyone at CalCoast. We're just elated to have you guys as a partner and appreciate you joining us today and sharing all this great info. We have ran over time for sure, but there are some questions, insurance related questions that have come up. If you guys don't mind hanging out for a second to answer those.
Sure.
All right. So each person, when you get insurance, you pay a premium, right? Which is basically the cost you're paying or the price you're paying to have the coverage. Does retirement affect your insurance premium at all, or can it affect it at all?
Yeah, I can take that. Yes, in some ways, typically if you retire, that means you're not commuting. Your usage of the vehicle is going to change from work use to commute use. And those are two factors that definitely has an impact on your rate. So in that sense, yes, it could definitely help.
All right, great. Kind of an interesting question. I don't know if I know the answer to this one. Does comprehensive coverage damage, sorry, I can't read today. Does comprehensive...
I can see it. Yeah, just comprehensive coverage damage to strike something on the freeway.
Thank you.
No, typically that coverage applies to collision. If you come into contact with something while you're driving, that's typically falls into the collision bucket. Comprehensive is like fire and theft, vandalism, those type of things.
All right. And does Wawanesa offer coverage in Arizona to Arizona residents?
Yeah, currently that's a great question, and I apologize for not being specific about where we coverage, but we're headquartered in California. We offer all through California and Oregon, and currently we don't offer in Arizona. But what I would say is, now post-pandemic, one of the great things about Wawanesa, because of our members staying with us so long, we have such high retention with our customers. One of the things we've been playing is, of course, growth, and we are ready to expand into neighboring states. So while we don't offer it in Arizona currently, look for us very soon. We're going to expand to some neighboring states. And so within the next 24 months, we should be coming into some neighboring states, which may include Arizona.
Awesome. All right. And when a person owns multiple cars, but obviously can only drive one at a time, why do insurance companies charge full price for all vehicles instead of liability only on each car and then a single full coverage rate covering the one car you drive the most?
Yeah, good question. So typically, if it's one driver, and 2 cars, typically you are going to pay a lower rate for both cars versus if you only insure 1 car. So the rate is different and lower on both cars if you have 2 vehicles and 1 car. But if you have 2 drivers and 2 cars, that rating factor again changes, and a lot of the consideration is going to be based on who's the driver that primarily drives that car, what's their driving record like, how much driving experience do they have, how many miles a year they typically drive. But typically, if you buy insurance on both of those cars separately, the rate's going to be higher. That's the typical one. So it might seem like a lot on both cars, but that's also depending on the type of car. So sometimes a more expensive car could actually cost less than insurance-wise. Just also based on the repair cost and how well a car holds up to an accident, how well it protects the passengers and things like that. So there are a lot of factors that goes into how the insurance rate is determined for a particular type of vehicle.
Whew, all right. Wow, what a lot of great information and a ton of great questions. I think we just went through, gosh, like 40 different questions here. So appreciate it again, Kevin, Leo, Jude, awesome info. Thank you for presenting today, being here with us. We, again, are just thrilled to be partnered with you guys. And for everyone out there, if you want to contact anyone, Kevin, Leo, or Jude, you can do that either through our website. We have both Wawanesa and New Cars Inc. Their info's there, and you can work directly through our site if you like. And also, a recording of this presentation will be available, so that way you can grab their contact info from that. We'll have that recording up probably in the beginning of next week on our YouTube channel, so you can take a look or keep an eye out for that. So with that, I think we'll go ahead and wrap up. We're a little over time, so thank you everyone for sticking it out with us. Join us next time. Next month we have July 14th. So keep an eye out for that email to hit your inbox and sign up for that webinar. We hope to see you there. Otherwise, everyone, enjoy the rest of your day. Be safe out there, stay cool, and we'll see you next time. Thanks, everyone.